Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. Today's Thursday, August the 8th of 2024. We're so glad that you are joining us for this edition of Financial Issues, where we help you sort through financial issues with a biblical world view. We help you use that biblical lens to put things in perspective, because, man, life can get really confusing out there if you don't have a good grounded source of truth to run all things past. We encourage you to go to financialissues.org to find out how you can partner with this ministry. This ministry is partner and listener funded. So if we've encouraged you in any way, if we've shared wisdom with you that has helped you in your financial walk, we ask you to consider either becoming a partner or supporting us either monthly or just any one-time donation that helps this ministry to continue the good work that we do in encouraging people to honor God in their finances, especially in the way that they invest. So financialissues.org, super easy to do. Just go there. You'll see the donate button, or you'll see the become a partner button. And if you're there for any length of time, you're going to see a little pop-up that asks you to sign up for our newsletter. The newsletter is free. We don't spam you with a bunch of emails. We send out an email once a week, kind of a recap of the financial news for the week, and of course, any updates that we have regarding the ministry. And encouragement to defund darkness, be a biblically responsible investor, and to fund the light, be a joyful and generous giver. Our stewardship verse today is Proverbs 15:22. Without counsel, plans fail, but with many advisors, they succeed. So you've probably heard the saying, jack of all trades, master of none. Well, I guess there are those rare people who are just know everything, that they're gifted in everything that they do. They have knowledge on many different topics. But typically, human beings are not gifted with understanding of all things. So that's why the scripture tells us that it is wise to seek godly counsel for the things for which we are not proficient. This biblical wisdom about succeeding with the use of godly advisors can certainly apply in the area of personal finance. You know, I wish that they taught that more in school, like home economics, that you should have a financial economics class about personal finance, that they would teach kids about loans and interest and credit cards and all of those things before they have to make some really big decisions about potentially taking on a whole lot of debt to continue their education in college. I think it would be very good if the school curriculums started doing that again. But biblical wisdom can certainly apply in getting financial advice. If you didn't have a lot of training in your home, as far as financial advice goes, if that wasn't your interest, if you didn't take those classes in school, then it might behoove you to get financial advice from someone who is proficient in that area. It can also be a prudent thing to get advice or counsel in the form of investments. Not everybody can understand what's happening in the markets. Not everybody understands that when you invest in equities that you're actually buying into companies, or how to evaluate those companies, how to know is this particular company good to invest in, or is this other one something better? So not everybody has those skills. Not everybody has that interest. So this advice can also is also applicable to investment management. So speaking of investment management, that kind of leads me into somewhat of a teachable moment, the difference between ETFs and mutual funds. Well, in ETF, I guess we'll start with a basic definition of what they are. An ETF is actually a security that trades like a stock, but it's a set of stocks, or it may be a group of stocks that mimic an index like the S&P 500 or the NASDAQ or the Russell 2000. There's a lot of different ones out there. It could also track or mimic a set of commodities, or even some types of fixed income. A mutual fund, on the other hand, is a collective investment in which money from many investors is pooled together and invested in either stocks, bonds, short-term money market instruments, or other securities under the direction of a fund manager. So those two things sound pretty similar. Here are some ways that you can distinguish between the two of them. So an ETF most ETFs have passive management. For example, the biblically responsible ETFs that we use set to mimic and one of them mimics an index, the S&P 500. So it has a set strategy or a set number of rules that you can think of it as a funnel, and it dumps all the investable securities into these funnels. And it has to be, a large company. It has to be U.S. based. It has to have 4 quarters of positive earnings. And of course, it has to pass through the biblically responsible screening tool to be included in that ETF. And then it's managed in the way that it's professionally selected, and then twice a year it is, you can think of it, everything being dumped back through that funnel to see what qualifies at that point. So there's really, there's not trading that happens in it. As with a mutual fund, you have an active manager, and that active manager, you can think, I said it was like a pool of investment. So you can think kind of a swimming pool, and the portfolio manager is the lifeguard. So they're the ones that tell people to get in and out of the pool. If they see someone drowning, they can reach in and grab them out. So with a mutual fund, a manager can, if they see a stock declining in value and they determine that it's a reason to sell it, they can sell it in between, whereas you don't really have that with the ETFs. Other differences are cost. So an ETF, because it is just passive management, there's not a lot that goes on there. You don't really have to pay fund managers just to mimic a commodity or an index. But there are other small costs. Mutual funds are more expensive because you're paying for that active management. Another difference is the way that they trade. So an ETF is an exchange-traded fund, which means that it trades on a major exchange, and it can trade like stocks. So while the market's open, you can place a trade, you can buy or sell shares of that ETF. A mutual fund, on the other hand, only has settlement once a day. So if you put in an order anytime while the market's open, you don't know what price you're going to get until the end of the day. So at the end of the day, the fund values itself, and that's how you pay the cost per share. Same thing when you go to sell it. If you sell it in the middle of the day, you'll know what how the transaction is going to settle at the end of the business day. So there's advantages, disadvantages, some that we've mentioned already. Mutual funds have active management. ETFs have passive management. ETFs have a little bit of advantage in the tax area because with mutual funds, if the manager is buying and selling, if they're accumulating capital gains, the majority of those capital gains have to be paid out at the end of the year, and that can be a taxable event. So it's possible, even in a mutual fund, to see a negative return on the year, but to actually get a taxable gain if the manager's created some capital gains throughout the year. ETFs, since they only rebalance, maybe once or twice a year, whatever their rules state, it's under a different set of tax laws, and it's considered an exchange of one stock for another. So, they don't have those capital gains to distribute. Several other different differences between the two, but we use all three of ETFs, mutual funds, and individual securities in our portfolio construction with our strategy here at Financial Issues. We have different models that you can do strictly mutual funds or ETFs, or you can do a combination of all three of them. So we offer all of those. When you become a partner with Financial Issues, you're able to look at those different strategies and see which one works the best for you. And then we even have videos to help you get started in building and managing your own biblically responsible portfolio, because it's really hard to find someone out there that you can trust to weed out and screen out those investments, because the world just doesn't have the same values that we as Christians have. So if you're listening on an outlet that only carries the short version of the show, we've got one more segment for you, so stay tuned. We have a full show available ahead. We're going to take a break, and then we'll be back.
When I took the test, I knew that I had other options. I was really scared. I know that it's really easy to get an abortion in New York. I've been down the other road before, and it really was a negative experience for me. And it felt like I did it because it made things easier for my partner at the time. And this time I thought, I think I want a different story. I'm just really scared. And she said, we'll take it a page at a time. It felt scary, but it felt like a good thing. I'm gonna have to, if I have this baby, I'm gonna have to do it alone, and that's gonna be really challenging. But I wanted to do it. But I knew that I needed help, and to get around people that would help me, not people who would say, this is a problem that we can make go away. More like, this is awesome, and we can help you make it more awesome.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Welcome back to Financial Issues. I'm your host, Shana Burt. Thanks for joining us today. We're so glad that you are here. Well, it's been a little while since we answered some questions, and they're kind of getting backed up there. Grant, you want to tell me what we have on tap?
Yeah, so we have a question from Joe. Why doesn't the FISM website search find stock symbols to see if the specific stock or mutual fund or ETF is on the buy, sell, or broad lists? Since working 5 to 9 Monday through Friday, my job doesn't let me permit to listen to the shows, only on the weekends. Thanks.
Yeah, so our resources, including the website, have been limited. Of course, this is a partner and listener supported ministry. So, we believe in being a good steward of what the Lord has trusted us with, and we don't get overextended. So, we have, our resources have been limited. Now, we have made a significant investment in improving, in making improvements to the website, and those are underway right now. So you're right, Joe. It doesn't give you the capability of doing that yet, but we're actually beta testing the website now, and I can tell you that it is much improved. So in the next month or two, I believe that we'll be rolling that out to the partners, and I believe it will be a great help to you.
All right. So we also have a question from George. What would you recommend for investments in hydrogen fuel suppliers. The big truck manufacturers are all looking at this fuel. It is cleaner than diesel and very available. The next big fuel source, he believes.
Well, we did have a company on the buy list, IN28. It is a company that makes equipment that uses that type of fuel source, but we have nothing on the buy list right now. So we're in sort of an evaluation period to see if this pullback in the market is just temporary or if it's the beginning of something much bigger. And we want to go over with a fine-tooth comb everything that we have on the buy list. So, look for those things to start to come back on. Another issue with this particular type of fuel is the upcoming election. If Trump wins, every time you hear him on the radio or the TV or anytime he's speaking, he's always talking about drill, baby, drill. So, we have enough fossil fuels to really fund everything or to really fuel everything that we want to do here. And so we'd have to take a look and see how we think that is going to impact those type of companies. What else do we have?
All right, we also have a comment and a question from Randy. My wife and I have some good friends who we've known since childhood and who are also good Christian folks. The husband works as an Edward Jones advisor, and some time ago, my wife and I opened an account with him so that we could, 1, buy some CDs with him, and 2, establish a relationship where my wife and I could share how we've only wanted to invest in biblically responsible companies. He has made several suggestions on how we could invest in various stocks in lieu of the CDs, but in each use, the suggested companies have not been biblically responsible. And thanks to your ministry, we have been able to share why each company was not acting responsibly. He recently emailed us about Guidestone funds that are as a possible biblical responsible investment. To give such backstory, my Merrill Lynch 401k plan at work will not allow me to invest in Timothy funds, nor will Edward Jones allow Timothy fund purchases. So my friend has been searching for biblically responsible investments. Have you heard of Guidestone, and are they biblically responsible? Thank you for, and we appreciate you so much for what you all do for us.
Great. Well, this is a great example of how, there can be a lot of Christian advisors out there, but just because someone is a Christian advisor doesn't mean that they understand what biblically responsible investing is, or maybe they work for a company like your friend does, Randy, that won't allow them to use the Timothy Fund. So, that is a problem with some advisors. If you've ever heard my personal testimony, I was with a company when I learned about biblically responsible investing that just absolutely would not allow me to do it. So, my heart was so convicted about it, and I'm glad that your heart is too, Randy, and I'm glad that you're sharing this with your friend. But I'm afraid that if he comes to the same conviction that you have, he's going to have to make some very hard choices about whether he wants to continue to work for this company or not. So in a lot of situations, financial advisors, when they are what's called captive, they're captive to the investment style, the investment philosophy that the company that they work for has. They're not allowed to be independent or make their own independent decisions. I mean, they can make some decisions, but within the allowable investments that their company has for them to invest in. So I have heard of Guidestone. Unfortunately, Guidestone is not biblically responsible. They don't manage in a biblically responsible way. I believe that Pat is going to be sending you, if she hasn't already, the evaluator reports. You can also, on our website, you can go to, it sounds like you already have because you've shared why some companies are not biblically responsible, but you can run those same reports, you can run those same screens on the Guidestone funds, and you can tell whether or not they're biblically responsible. Now, the reports that Pat will send you are going to have a lot more information on them, most likely. I did personally speak to someone at Godstone about their philosophy. They did claim that they do biblically responsible investing and that they screen out some companies. But, I pressed them in particular. I had already done a screen of some of their funds. And at the time, one of their funds owned Netflix. And I said, I called them out on a couple of stocks, and they said, well, yes, we know, what they do, but we also look at the opportunity of being able to have some sway over these companies when we own their shares. And so I asked them, so you're telling me that every company that you own that is screening dirty, that you're engaged in activism to get them to change? And he said, well, no, I can't really say that about all of them. So I couldn't, in good conscience, recommend Godstone as a biblically responsible investment company. What else do we have?
All right. So we have a comment from Randall. I'm 51, living with my parents, debt-free, and have money from selling my business. My retired parents, both 68, want to gift me money. My dad gets Social Security, and my mom has a small retirement fund, and they have some savings, investments, and home equity. Mom has early onset dementia, dad has depression, and a history of mental health issues. What are the tax implications of their gift, and how should we handle my dad's IRA distribution and other finances? We've listened to your program for over a decade, and my parents are believers in Christ.
Well, that's great news. The best news there is that your parents are believers in Christ, and we're so glad that you listen to the show regularly. And we want to be able to help you in the best way that we can. So, that was a lot of information there. One question that I would have is, is the idea of making these gifts, it doesn't sound like you really need anything to support your own budget, but, is this an effort to try to spend down assets to qualify for Medicaid? If so, I'm not really a fan of that strategy. I know that there are lots of elder care attorneys and, financial professionals out there that will try to help hide money in order for parents to qualify for Medicaid. Like if one or both of your parents need more help than what you can give them, living with them, if they need to go into a nursing home or something like that, you can qualify for Medicaid to pay for that, but you have to have spent your assets down to a certain level. So, even if that is what you're trying to do, there is a 5-year look back period. So if the gifts were made this year, it would have to be 5 years or more down the road that they would be trying to qualify for Medicaid. I'm just not a fan of trying to do that, because, I believe that God takes care of us all. He takes care of our parents. He takes care of our children. And the resources that your parents have, I think, should be looked at as resources to pay for their care when and if they need it. And then, estate plans should be made for the passage of that at the time that they go home to be with the Lord. So the things that I would say that you could be of good service and help them do is to make sure that they take their required minimum distributions when they're required. For your mom and dad both, that's probably going to be at age 72 or 73. You could also talk to them about being tax efficient. And you mentioned that they're Christians, so hopefully if they're Christians, they're living out their faith and they're giving. And so once they turn 70 and a half, you can talk to them about doing their giving through their IRA. That will help them give less money to the government, as they'll be able to get that out of their IRA tax-free. And I mean, those are the main things that I think that you could help them with.
Awesome. And then one final question from Pat. I cannot find in any of the videos what it means when a blue box is around a certain stock in the buy list. Can you tell me what that means?
So, Pat, it means that it's an income stock. And I mentioned a little bit earlier that we are doing some major updates and changes to our website. That information is going to be a little bit more easily accessible. We won't have really the color coding on the new website, but we will have an indication as to what type of stock it was, and it'll be, I think, easier to discern. Well, folks, if you haven't noticed yet, Seth is on vacation this week with his family. We hope he's having a wonderful time with them, but he will be joining you all for Bible study tomorrow morning. Make sure that you go to financialissues.org, click on resources and the Bible study, and you can connect with Seth tomorrow morning. We hope that you will do that. Well, folks, if you're listening to a station that only carries the short version of the show, we bid you a farewell and a good day. But if you want to catch the full show, go to financialissues.org or download the FISM phone. Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
Samuel Case, news anchor with FISM News, sits down to read real comments from real viewers.
All righty, let's see, a bigger one here from Spectrum Nomad. That's a fancy name. Finally, a non-biased news source that tells everything how it is without having to push their opinion. You know, it's not necessarily true we're not biased. We are Christian, we are conservative, but you're totally right that we don't try to push our own opinions or commentary in the story. So it's really great to hear that you're picking up on that.
Are you a Christian seeking to align your investments with your faith? I'm Shana Burt, host of the program Financial Issues. During our program, we share valuable information about the financial issues of the day, including how markets and the economy are moving and how public companies are behaving, helping you to make wise decisions with your investments and the money that the Lord has blessed you with. Using biblical standards, we provide you with valuable financial insight based upon Scripture, making it easy for you to invest in a way that aligns with your values. I can assume that most of you have investments in a 401k or IRA, but what I am sure of is most of you have no clue that the companies in your mutual funds may be funding the LGBTQ agenda, pornography, abortion, the list goes on and on. By listening to Financial Issues, you will learn how to get rid of those investments that are dishonoring God.
Become a partner today by simply going to financialissues.org/join. Click the green button to become a partner today.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person in need. While that share takes care of the financial portion of a need, medical needs are complex and include the physical, mental, emotional, and spiritual aspects as well. While the financial gift is important, if we stop there, we miss an opportunity to minister to the whole need of our brother or sister. When you faithfully pray and send a note of encouragement and scripture along with your share, those words become a vessel of God's continued healing and blessing on the receiver. And the impact it has is immeasurable, bringing glory to God and provision and unity to His church. Glorify God with your health care. Send a note this month.
Thanks for being with us today. I hope this can be an edifying show for you. This is a best of Financial Issues.
Securities offered through G.A. Reffel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reffel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. We're so glad that you tuned in today and that you're Sticking with us through the long version of the program. Well, I'm sure much has been said by now about the presidential debates last week that we saw between former President Trump and current President Biden. One of the things that they did touch on during that debate was taxes and spending. Now, they didn't spend near enough time talking about that for my liking, but it's something that you'll hear us talk about a lot here at Financial Issues, because we want to be good stewards of everything that God has trusted us to manage. And as good citizens and stewards of the Bible and those that follow God's word, we pay Caesar what is Caesar's. So we pay taxes. Now, we expect the government to be a good steward of those taxes. And you'll often hear us say here that we want to be tax efficient in the way that we invest, because at the end of the day, it's not only about what you make, but it's about what you keep. So part of being a good steward is to manage your tax liability legally and in a very efficient way. So you hear us say often that I believe that taxes are going to be higher in the future than what they are today. And the simple reason for that is that the government doesn't make money. They only appropriate money. So we, the people, have given them the ability to collect taxes from us and the authority to spend that money how they see fit. Now, you hear me rail often that they're doing a terrible job with the way that they are spending money. So historically, taxes have been collected to the tune of about 17% of GDP. So GDP is gross domestic product. That is our whole economy. So between businesses, individuals, the average rate is that we collect about 17% of GDP. Spending, according to the CBO reports about the government budget that have been released recently, indicates that we are spending at 24% of GDP. Now, you don't have to be a mathematician to see that that's a problem. Revenues coming in at 17% of GDP, spending at 24% of GDP, that is a problem. And the budget deficit for this year is predicted to be, this fiscal year is predicted to be, which we're almost 3/4 of the way through, is expected to be right at $2 trillion. And I didn't hear any talk in the debate about cutting expenses anywhere. So what does that mean for us individually? Well, we have to look at the window of opportunity that we're in. You hear us talk about that often. Well, what exactly does that mean? The current tax structure that we're under right now was brought in under the Trump administration. It's called the Tax Cuts and Jobs Act, and it expires at the end of 2025. Now, I brought my friend and colleague Jason MacDowell back to talk with us about what's happening there and what we can expect. So, Jason, welcome back. Thanks for being here today.
Thanks for having me.
So, obviously, we are not tax experts. You know, you should rely on your tax expert for your own personal situation. But in general, let's talk about what are we looking at here. You know, the lowest tax bracket right now is 10%. That wouldn't change if the act expired. And the highest tax bracket would only go up 2.6% to 39.6%. Now, Biden is claiming that he would not raise taxes on anyone who makes less than $400,000, and that he won't renew the Tax Cuts and Jobs Act. So tell me, how is that even possible if the current act expires and we go back to where we were in 2017?
Yeah, you know, it's convenient for the current administration now to say what they're going to do with changing taxes when it's just going to go back and revert back to what was formerly there in 2017 before the Tax Cuts and Jobs Act started in 2018. So we find it funny that Biden talks about not taxing anybody less than $400,000, but really what's happening is they're letting something good expire to all of us. as individuals. So that's the first thing we look at is what are those percentages going to be? The lowest being the 10% will stay the same, but in 2017, those rate changes for those brackets will go from the favorable 12, 22, 24, and 32. It will go back to a 15, 25, 28, and 33. So it's effectively raising taxes without really changing anything at that point. Now, we can always sit here and say, well, they'll probably take some pieces of the TCJA, package it up, put a nice little bow on it, call it something different, but we don't know what they're going to change, what they're going to keep. We only know what's being said around this time. So that's one of the changes that will happen. That will affect everybody. And that will be higher taxes. You're paying more on it. And then, of course, probably the biggest piece that we look at when we talk with clients is the fact that the standard deduction will actually get cut in half. So if you're looking at married filing jointly or even as an individual, the standard deduction is really good and hard to beat. The TCJA, Tax Cuts and Jobs Act, did actually freeze some of the itemization that was in there to make it more favorable to use the standard deduction for both either individual or married filing jointly at that point. So it was encouraged to use that one because it was just good. It was hard to beat with that. But that will actually force households and individuals to look at using probably the itemization just because they got used to using that standard deduction at that point. So it's going to, if it goes back.
And I think what people really don't get here is, the standard deduction, or if you itemize deduction, that represents the amount of your income that you pay zero tax on. So, you're looking at for married filing jointly, pre-TCJA, that number was somewhere around 12,000, maybe a little bit more if you were over 65. Now, if you're over 65, that standard deduction, or starting in 2018 and has gradually increased, is close to $30,000. So, you're looking at a good chunk of change that you pay 0% on. The other thing, too, that really changes things for people is that the amount of income that you pay in certain brackets is expanded under the TCJA. It would shrink back under the old one. So if you're in the 22% tax bracket right now, I don't know if you know the numbers off the top of your head, but if you're in the 22% tax bracket right now with the same income, what would that look like under, if it fell back to the old brackets?
Yeah, if it fell back to the old brackets, you're looking at a possibility of being put into a even higher tax bracket, plain and simple. You might be making the same amount of money, but now not only did you lose that standard deduction, but now you've just been pushed into a higher tax bracket. So for instance, if you're in 22, you could now be in the 25% bracket, depending on what they change. Now, it's supposed to adjust for inflation. That's the most likely scenario, but instead of speculating, just us sitting and looking at the raw data from 2017 as the law stands, a lot of people are going to be in a higher tax bracket. So
right.
You have inflation on top of higher taxes and losing that deduction, that money you don't pay taxes on. So
right. So I believe that there definitely was tax saving for the average person under the Tax Cuts and Jobs Act, because we deal with this every day in practice as we're helping people try to figure out how to be tax efficient, and just the stats tell us that the standard deduction, the changes to the standard deduction was such a big deal because before 2018, about 47 million people itemized their taxes. That means that they had more deductions than what the standard deduction was. That was about 30% of filers. After the TCJA, that number dropped from 47 million to only 15 million people, or 11%, from 30 to 11% that itemize their taxes now. So the standard deduction has been a real help for those people. And, especially for people that are over 70 and a half who do giving. But we don't really have time to get into that today. All of these things, I think, in general, if nothing else is done except to let them expire, it's going to be a bad thing for a lot of people. But there is this window of opportunity that we have here. So maybe we will get into that. We don't have time to go into that more today, but why don't we do that next week? Why don't I have you back next week, and we'll talk about some of the things that we're doing in private practice to help our clients be really efficient in the way that they preserve more of the returns they're making by being efficient in their tax strategy. Well, thanks for being with us today, Jason. Appreciate it. And folks, we hope that you will stick around. We're going to come back with more financial issues after a short break. And I believe that we also have the ag report coming today. So find out more about our ministry, financialissues.org. Find out how you can be more tax efficient in your strategy, and more importantly, how you can honor God in the way that you invest. Hop on over to financialissues.org and learn about becoming a partner today.
Today, it's easy to get caught up in the rush and forget about what really matters. But when it comes to your money, are you making decisions that truly reflect your values? Too often, we invest in stocks without knowing what they stand for. What if your money could speak for what you believe in? Imagine following an investment strategy that recommends companies that don't support the things that break the heart of the Lord. A steadfast strategy, never wavering from biblical truth. When your investments align with your values, your money speaks for you. Let your money do the talking. Invest in what matters to you. Because biblical values matter, even when investing. Visit financialissues.org to learn more. That's financialissues.org.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Thanks for being with us today. I hope this can be an edifying show for you. This is a best of Financial Issues.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Laughter is good medicine, they say. And we had a good little chuckle there in the break. We have some comments.
Yeah.
And, it kind of makes me wonder if the Lord gets a little chuckle as he looks down and watches the things that we fret about and the things that we do to try to, the problems that we seem to create on our own and the ways that we come up with to solve them. But Seth, you want to share some of the conversation?
Claude from Louisiana, comment of the day today, possibly, when we were talking about the cow flatulence tax with Craig there, Shana, he was saying, I hope that gas tax isn't extended to old people. I would agree with you, Claude. I mentioned in the chat, I don't think I have to avoid certain foods like bean burritos, eggs. Got to stay away from that stuff.
Well, I guess they've already figured out maybe bugs don't cause as much gas as
true.
Real food that
absolutely
God gave us.
Yeah. Just crazy. Ridiculous. Just ridiculous.
It is crazy.
Yeah.
All right. I guess we got to get serious again. We wanted to share our chuckles with you.
Yeah.
Let's get to the phones. I think Minda has a serious question for us. Hi, Minda. You're on Financial Issues.
How are you?
Doing well. How about you?
I am good, Shana and Seth.
Hey, Minda. Great to talk to you.
Seth. Thank you so much.
Yeah. You're welcome.
Shana, I loved what you said about timing the market, because I never, except when your emails come into my email I never look at the market. I don't have a clue what it's doing until I read your email. And so you made me feel a little better about that.
Good job.
So my question is, I know this is not on a buy list, so maybe you could answer it from a general standpoint versus I'll tell you the specific. Can I name the fund since it's not on any of your lists?
Yeah, that's fine.
Okay, it's NXP. It's a tax-free income, Nuveen Select tax-free income. I think it's a muni bond that's tax-exempt, has a 4.3% yield. But just in general, you can tell me what you think about those types of things.
Okay, let me just start with the basics for those listening that might not understand what that is. So a tax-free bond is going to be a debt instrument. So when states or municipalities, things like hospitals, universities, water treatment plants, things like that, when they want to borrow money, when a municipality borrows money, they do it in the form of bonds a lot of times. So they sell bonds to the public. And because it's for some type of public improvement kind of project, usually they get preferential tax treatment. So the interest that you earn on tax-free bonds are not federally taxable. So I guess your question is, do they fit in the portfolio? Is that kind of what you're asking, or?
Yes, it is a fixed income fund, and it pays 4.3%. So, yeah. I need some fixed income, so maybe I should just look at our buy list instead of. It is recommended by WISE, which is they're not necessarily BRI, but they usually have some things that are decent. But this is. I generally follow FISM, but my husband gets this particular newsletter, so I needed some. Not income, but fixed type things.
Right. So one of the things that you have to look at when you're looking at municipal bonds is what tax bracket you're in. Unless you're in a pretty high tax bracket, the taxable equivalent yield for municipal bonds is not really going to give you much of an edge. So the theory with municipal bonds or tax-free bonds is that, if you're paying, 30% in taxes and you have to pay taxes on your interest, that you can get a lower rate and still make the same yield after you account for taxes. Now, if you're in a lower tax bracket, that's not the case. You have to look at the spread. So if you can earn 4.3% tax-free versus 5% taxable, if you're in the 12% tax bracket all day long, it's going to be better for you just to buy the higher yielding fixed income investment and pay the taxes on it. In addition to that, if you're looking at what type of account you're buying it in. If you're buying it in a tax-deferred account or a tax-free account like a Roth or an IRA, that tax advantage for the municipal bonds just goes out the window. So, you also have to be really careful within certain states. I mean, I think you had also sent this question in and you mentioned, a lot of states have balanced budgets and things like that, but a lot of states aren't following their own rules. They don't have balanced budgets. So, when you have a fund like that, anytime you have a fund, whether it's a mutual fund or an ETF, you're really relying on professionals to pick and choose the individual things that are going to be made up, that are going to make up that fund for you. So you have to have a lot of trust that they're doing their due diligence there. If you're picking your own individual ones, then it's really up to you to look at the issuer to see if they are running a balanced budget. Are they responsible? One of the trends over the last decade, or probably even more now, and I think one of the reasons that this ministry has really kind of shied away from municipals is that a lot of municipalities are no longer issuing debt to fund projects. They're issuing debt now to refinance their old debt. So, needless to say, I prefer the things that we have on our fixed income buy list, and I think there's still sort of a rate advantage unless of course, it's a non-qualified account and you're in a really high tax bracket. And to the BRI nature of the question, so when you're buying bonds, you're actually the lender to the institution. You're letting them borrow your money. They're paying you interest. At some point later in time, they're going to give the money back rather than the owner. So, as far as the BRI question goes, most of them are probably pretty neutral.
Okay. I think I'll just go back to our buy list, and because I know that you have vetted those investments very well. So I think I'll just go right back to the FSM buy list.
Thanks, Minda. You always call in with some really great questions. We're so grateful for you because, you're brave enough to ask the questions that maybe everybody else has, but they're not asking.
Yeah.
Well, thank you. You always give good education on our questions, so I appreciate it very much.
We appreciate you too, Minda.
Thank you.
Thanks,
Y'all
Minda.
have a wonderful day. All right.
You too.
Bye-bye.
You too.
God bless you.
All right, let's continue in this vein and try to knock out some more
Sounds good.
questions.
Let's do it, Shana. First one here, Kay, age 70. Kay is trying to lower my credit card debt and have had an email offer of credit cards that give me balance transfer with no interest for about 15 to 18 months, but they are with some credit card companies that I remember being rather bad to support. So the question is, do you have any credit cards you can recommend with interest-free for a while? I use a credit union and have the credit on my Fidelity credit card where my stock account is also. Any advice for Kay there, Shana?
Yeah, I don't really have, we use credit cards for operational things, but I typically tend not to carry balances on the credit card, so I'm not familiar with any of the offers. What I would tell you, though, is that you have to make sure that you count the total cost because, although they may be offering you zero interest for 15 to 18 months, they will charge a balance transfer fee. So, that balance transfer fee may be 3% or even 5%. So depending on how long even if you get the money, the balance paid down in that 15 to 18 months, which would be a really good goal to have, there is still a cost to it. Otherwise, credit cards companies wouldn't be in existence. So, in this case, I see that, you're worried about doing business with Discover or Wells Fargo, which, Wells Fargo has had a set of its own issues with, consumer protection and doing some things that weren't exactly friendly to the consumer. I would probably opt to go back to the credit union and see if the credit union offers a credit card. The fees might be lower. They might be more straightforward, and just make sure that you're comparing them on an apples-to-apples basis. And as far as the BRI question goes about whether the issuers are biblically responsible or not, I would say that this is a case of neutrality, too, just like in what we were talking about with the municipal bonds. In this case, you are the borrower, still not the owner of the company. So, sort of a BRI neutral. I would just look for the best terms and look at the overall cost. Is there a transfer fee? Versus, if there's a high transfer fee, but maybe your credit union has a really low, a really low offer, that might be a better thing because, even if they're sort of the same rate, you're paying the balance transfer fee on the whole balance. If you pay it as you go, hopefully you're paying that interest over on a declining balance. I hear the music. That means we got to go today. But folks, we hope that you will tune in tomorrow and the rest of the week because, Lord willing, we're going to be here to remind you that God owns it all. The Master is coming back, and there's going to be a question of how we handle the time, talent, and treasure we were trusted to manage. Our goal is to give you good advice and help you be found a good and faithful steward when you give your account to the Master. Well, folks, find out more about our ministry, how you can partner with the ministry at financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us.